Hello, hello, hello. Happy Thursday, everyone. How's everyone doing? Sorry for having to cut it short. Yesterday I had a minor emergency I had to deal with, but things should be okay today. So thank you for tuning back in. Good morning, Mark. Good morning, John. Sterling with all the numbers that came out today. Thank you for posting those, Sterling. Did you get any of that information we talked about the other day? Did you have time to look into it at all, Sterling? Good morning, by the way, which is more important than anything. Saying good morning to people. Nvidia's dropped a little. They did beat. Margins were slightly worse than expected, and they guided that margins are coming down a little. Then they have some other sort of bullish guidance. So initial drop after hours, and then now down. I think it's, what are we down? Like just over 3%. 3.7, 3.33%. Lots of upgrades though. Buy the dip. Wall Street, hey, buy the dip because we're going to offload because I think this is the top. We're heading into the top in AI. But, so what was Wall Street do? Buy the dip retail because we got some stock to sell you. We got some stock to sell you. Thank you for putting that in there. We had the GDP numbers come out, the GDP PCE numbers. We'll get to those in a second. Sterling put them in the chat. Good morning, Patrick. Dollar General, big drop on Dollar General. Again, it's just bifurcated. Even with the economy, it's so bifurcated because the lower and middle ends are not doing well because inflation's just wiping it out. Dollar General's showing that in the results. They're, people can't afford stuff. And I even think some of the middle, what's left of middle upper class is just leveraging itself to the hill. And look, stocks, people are all in on stocks, all in on the stonks. So that never ends well either. But does that mean it has to roll over tomorrow? Nope. So, yeah, there you go. NVIDIA price targets. There's all your raises. AS, good morning. Good morning, Royal Palms. Good morning, Jacob. Good morning, McRangers. Good morning, Richard. Hello, Charles. What else? Got something on all the info. Thanks. Yeah, whenever. I was just checking in, Sterling. No rush. No rush. I really appreciate it, Sterling. What was that? 50 billion buyback and dividends to be paid? Yeah, for NVIDIA. So you know what? Here's the thing. Oh, I can't stand stock buybacks. That's what you're using your money for. Oh well, that's another rant for another day. So GDP second estimate. Remember, this is from second quarter, and we'll still get another revision, and then they can still keep revising it. We'll get another official revision that's published, but they'll keep revising it anyways. So remember, they can revise something a year later. Well, I mean, what? Oh boy, I'm not going to start. All right, so coming in at 3% versus forecast of 2.8. Price index coming in at 2.5 versus 2.3 expected. The PCEs coming in slightly better, 2.9 expected versus 2.8 actual. Big drop from the prior. From Q, that's not the prior revision, that's Q1 GDP. Core PCE. PCE prices quarter over quarter coming in at 2.5 versus 2.6, expected down point from 3.4. But these numbers, I don't know how the Fed, with these kind of numbers, can still justify, I know they're backwards looking, but justify going 50. Unless, remember, not tomorrow. By the way, before I forget, we are going into end of month. So do not be shocked at window dressing either. Okay, end of month, tomorrow. And it doesn't have to be just a day, because I'm watching today and tomorrow. We got the monthly PCE numbers coming out tomorrow. So the volatility is not out of the way. Consumer spending, real consumer spending 2.9 versus 2.3. So consumer still spending its rear end off. Who is here? Good morning, Ted. All right. So those numbers, I mean, if the Fed can try to justify a 50 basis point cut with this, then then I don't know. But we'll have to see. We got Bostic speaking this afternoon. What else do we have coming out this morning? Pending home sales. We got some T-bill auctions, the good old bill auctions, and then remember, core PCE and Michigan consumer sentiment tomorrow. All the mega caps up besides NVIDIA. I'm watching for the gap fill in that. There's your Dollar General, down 25%. 24.98. Let's just call it 25%. That is not good. Well, let's see. Groups. Is technology still slightly negative going in because of it? Nope. Nope. Everything but consumer defensive is the only thing negative. Everything. I mean, we're probably going to get the mad rush into buying the dip with NVIDIA. Comm services back up. Consumer cyclical. Sort of a bullish market also. Window dressing. Remember, end of month window dressing. Let's see what the latest probabilities are. I'll jump back to here in a second, but we're still upper end of neutral mode. Now let's see where we sit. 67% for just the one cut. And then now we got one cut in September, one cut, and then the double cut still in December. And then projected by next June, we should be at 3.25 to 3.5. So that's some, 200 basis points in cuts. So we also had Best Buy, which was a beat today. Gap up in Best Buy, looking like straight to the 50% harmonic. Dollar General down that 25%. I have the reverse harmonics. I call up a chart if I remember to do that on Dollar General. After the close, you got Dell and Lululemon are the biggies. Those are the biggies after the close. And then tomorrow is all just going to be in those PCE and consumer sentiment. No earnings really tomorrow that's going to move anything. So, yeah, Dollar General was like, let's just call that out for right now. So here's your Dollar General. So I have the reverse harmonics on because they're going backwards in time from the peak in March back to the lows of last October, and gave me 92.72 as the next little key level. We're looking at 92.80 opening around there pre-market, and then on a continued sell-off. That's not necessarily today, but on the next potential rollover play, about 84 is the next target lower. Where does that put it overall? I mean, look at this. Look at this. I mean, Dollar General, this is not a good looking chart. Also, just from the longer term perspective, you had some key support coming in here. Where'd my line go? Key support, key resistance, blah, blah, blah. There you go. We're roughly in that area. So on any bounce, even to 95, you're running into some pretty key resistance. But this would not be something I'd want to try to bottom pick. What is the PDE? Still 18. That's going to be down today, but this is going to get into some interesting territory that, there'll be a bottom formed at some point. It's just not yet. Yeah. What is this? Mike, any comment on this? I'll confess I can't. Something is off. Let's see. I'll confess I can't explain it, but something is off. 3 years after the highest volatility in real personal consumption expenditures per capita, we get the lowest. Numbers don't, yeah. Michael Green's a very smart guy. Very smart, very data driven too. There's a lot that can't be explained right now. There's a lot that can't be explained. Trust the numbers though. You know what? I trust the charts. So we broke down yesterday straight to the bottom of the rotation zone. overnight and prior. So we had, let me show you what the key line was watching. This area, so prior resistance, broken, retested with support. Remember, it's not a hard wall, it's an area. And why is this also significant? Because you had this key emotional close from Thursday to 15th on it, and that made this a very significant level, right in that area. Dipping down there in the rotation zone. Now we're rotating back up. By the way, these reverse harmonics can be taken to that point. So, rotation zone still holding, and support resistance still holding. Support, I should say. Now, if we start breaking down below today's low and the rotation zone, and then follow through and close below the 50, it's going to be an early warning sign for me. And early at this point, because now we've established a really key area. Other than that, why are my levels off? Why are my levels off? Got to get those right. All right, so what else do we have here? Really key resistance on a continued rally into the open is this 56.50 area. So 56.50, then about 56.65, we break above the highs from Monday. Look, we got a cluster with prior price action, that's the black line, and the harmonic, 56.82, then 56.96. Those are all the levels. Now also, let's take a look at this. This is where it's handy. We have this key low that was formed last night after NVDA earnings. So, one of the other things, look how nicely things line up. Harmonics, you had the support area, which was broken yesterday, retested. See, the next candle retested it. See this? Then we came down, and on a shorter term, on a 4 hour, this was actually a percent beat buy on a 4 hour. But look where that 62.5 is. So guess what I'm going to be watching? For a follow-through close above that on a 4 hour basis. That does not mean I have to wait 4 hours to do something. It means I'm watching for the follow-through close above 56.28. Not only because it's a 62.5 harmonic from this retracement, it's because it was also support, sliced through it with an emotional candle, retested, became resistance, and now it's trying to hold back above that level. So this is very key over the next little bit, even tomorrow. When the Dollar Tree for the first time noted everything was $1.25. See? Look at that. Now, see, so they're going to have to rename Dollar Tree a $1.25 due to inflation tree. So, hey, that worked out. Dollar is now $1.25 because of inflation over the last 4 years. So it was in line. You know, everything's $1.25. During pre-market trade alone, NVIDIA is already up 6% from its lows. Yep. Yeah, because we're still in the market, still in by the dip. I'm just saying longer term, this is going to start to roll over, I believe, in the AI stuff. And I believe NVIDIA will start missing. You watch. In coming quarters, it'll start missing. And margins are already getting squeezed. So that's why retail's going to be left holding the bag. Yeah, $2. Maybe it should be $2 adjusted for inflation tree. Where's my $2? If somebody can name what movie that came from, I will be impressed. Where's my $2? I will be impressed. I'm curious. That's a throwback movie. NVIDIA already filled the gap, holding the channel. Remember, this has still done nothing to change the probabilities. This is still We still have the magnet prices higher because of close of 62.5. We've now gone from a sideways pullback to a pullback, but still holding the rotation zone again on the weekly basis. So it's going to get interesting now. Daily cycles are at the bottom. Weekly cycles are still heading up. Could we get another, maybe through next week, 2 weeks until the Fed meeting? Could we continue to get the push higher? Yeah, and take the NASDAQ into potential double top territory? S&P, remembers there. Could the S&P even get to new highs? Yeah, it could. Because remember on the S&P, weekly cycles are up. Daily cycles are still trying to turn up. You got it, Ted. Ted, John Cusack, better off dead. $2. The paper boy. Oh boy. Ted, if I had prizes to give out, Ted would win a prize. John, man, I love that movie. Remember the Camaro in that, the SS Camaro? Oh, boy, I wouldn't give them one of those right now. Dow pushing up. I think this is gonna dip into the rotation zone, pushing up, little sideways correction, then to pull back to prior resistance becoming support, now breaking above. This looks like, well, nothing's guaranteed, and I would never say that, but I'm targeting the takeout of the highs from 18th of July, and still in massive double top territory. Russell, back to the rotation zone. Just breaking slightly below the support area, but still holding. Remember, it closed above the 62.5, hit the 75. So I'm at least watching for a return to potentially a 75. Key target area on the Russell now is 22.25. The VIX, not doing much at all. The only way I'll start watching again for the bigger pullback is if we start moving above 16 aggressively. Back in my day, the chicks drove Camaros. Really, Richard? Where and what part of the country was that in? The scene with the kid riding the bike down the ski slope. Yeah, chasing $2. Oh, sorry, I'm forgetting sidetracked. I do love that movie. It's then what was the next one in John Q? If you could name the next movie he was in, I'll really be impressed. John Cusack went to the rival high school of me. He went to Evanston High School. I went to New Trier. So, by the way, DAX closing in on its highs. Next key target, if it gets above its highs, 19,250 area. Notes, looking like it's trying to roll over a bit more with the yields trying to break out the upside, but still in a huge consolidation pattern. By the way, 10-2s by the Fred data, the official Fed tracking, St. Louis Fred data, actually had the 10-2s officially, and I'm not talking the futures, we track the futures, but that had it closed above zero yesterday. And we are well back above zero, so continuing to climb to the first target. Remember, once this gets above 20 basis points, it starts getting real interesting. Michigan. So in Michigan, wow, the chicks did not drive Camaros. At least, what year was that? Was it a 68? They did not drive those kind of cars around me. All the girls, and a French girl working on the Camaro is a thing on 16-year-old dreams. It wasn't high fidelity. The next one was not high fidelity. The next was One Crazy Summer, I think it was. So keep an eye on the 10-2s. Dollar index. Remember, I was watching for a short term. We're now getting in the rotation zone, so we could be setting up for a bigger bottoming pattern. There was a little double. Here. See it right here? Triggered. Pulled back to the trigger point, which is this is the kind of setups I love, and now threw it into the rotation zone. So I'm still going to be watching for a stronger, but this is a minor pattern that can keep trailing. Would not be shocked to see, especially over the next few days, for another potential roll over to retest at least a pullback level. And very key support is right around 160. Crude 73.76 was the 62.5 level, which would, if we had closed below that, would have taken me back to short-term bearish mode. We've held this. We've held it. But is there a fantastic trade? No. There is not. This was a very lopsided mess right here. I'm going to be watching for, if we do close above this 4-hour high, 75.50, going to be watching for some continued price action higher. Gold, still nothing. The potential double is still in place, with now the rotation zone would be out of the way. So if we got a sudden quick gold sell-off, it could be a pullback to the area of the 50. Other than that, the long-term pattern is still bullish. Silver, still not invalidated. And there's still a mini, now it might be a triple at this point. Nope. Yeah, it is. It's a triple top. Sorry, this mini double is no longer. Mini double is no longer. Yen. Keep an eye on this. Keep an eye on this. Your little double bottom here. It's actually confirmed and triggered. So the yen could be still a weakening. Is that in the bigger pattern? No, but this could continue to see a bounce. The key pullback level is 145 now. All right, euro. We're continuing the pullback here. Next key support is about 110.50. So I'll be watching for a bounce play only coming up shortly, but it's not there yet from my perspective. Spiders, again, on anything bearish after the open, it would be for the gap fill to yesterday, 558.30. And then this, pay very close attention to this area if you're trading the spiders. This is very, very key. This level I just put on there, right around 554.60, 554.65. So you see it was a close there, reversal, spike high back on the 1st of August there. Broke through it and retested with, this is where I will pay attention to lows. 3 key lows. Now we also had some key closes there, but 3 key lows. So we start breaking below that, I'm going to sit up and take notice. That's level that I'd set an alert at if you're trading that, if you're trading the spiders. Okay, other than that, key resistance is 563.20 and then 565.16 area. If it breaks out, remember the next magnet target on a move higher is 572.02. The Qs, any rollover play would be you saw this area of significance that was on the chart, this 471 area, which is roughly where it closed yesterday. That's going to be key. It's technically to 471.35 on a rollover play, but I'm going to be watching on a potential break above about 477.50 for the up move. And if you're playing along at home, Pay attention. This is a great area to watch. 40 close, 478.92 on a 4-hour closing basis on any recovery mode. There might be long setups before then, just like there could be a 4-hour percent beat buy, but the target area I'd use would be between 476.72 to 478.92. And if it closes above 478.92, continue in trailing mode. So the first target I would use between the 50 and 62.5, and then if it closes above 478.92, I continue to trail. It does look, well, let's see. We're going to see, but remember we got end of month and we got PCE numbers. So on any move down, Charles, really pay attention to yesterday's close. What else? Let's take a look at NVIDIA. Sorry for going long and getting sidetracked with John Cusack movies. NVIDIA, little selling pressure here, but if we continue down, 117.50 is very key. I'm going to be watching if this market bases. I'm going to be watching for NVIDIA. The key area in NVIDIA in the short term, remember, got all those upgrades. Try to suck in the public. And we still have not invalidated the 87.5 rule. Not a guarantee, but it could get interesting. This thing could easily push higher with retail dip buying over the next few days. I will pay attention though. I will sit up and take notice if it closes below the 50. More butch chicks. Don't worry, this channel's already demonetized and doesn't show up in search results a lot of time. So it doesn't really matter, does it? You can say, what are they going to do? I guess they could ban the whole channel. Yeah, looks like a gap up in Tesla trying to hold this 200 again. Is there news in the Mideast? Oil. Yeah, you know that tanker that was hit by the Houthis, and this could be the largest spill ever? Where is that in the media? Where is that? I mean, that's well, it's really bad just when you put that much oil into the ocean. So I'm not making fun of that. But where all the climate people with, oh my gosh, if an oil company at their fault put some oil in the ocean, it's like, your people flying there with their Dove soap. I mean, not Dove soap, I mean Dawn soap. But you don't hear anything out of that tanker attack in the Middle East. Nothing. I don't know if there's any news out on oil. I'll have to scan after the open. All right, well, that's where we look. Let's just peek back. It looks like the NASDAQ, this is a pretty strong bounce. Buy the dip. Buy the dip. All right, so keep in mind this 56.28.50 level. Okay, especially in the next 20 minutes. So at the bottom of the court. Yeah, this could be the biggest oil spill ever. Where is it? Where's the news? We can't trust the numbers. We can't trust the news. Can we trust 80s John Cusack movies? That's the real question. That's what it's coming down to. All right. Thank you, everyone, for tuning in. But where was Coco this morning? Where's my buddy Coco? All right, I'll talk to everyone later. We'll be back tomorrow for, remember, PCE Friday and consumer sentiment and end of month. So we could see some still interesting moves back and forth between today and tomorrow with end of month positioning. Talk to everyone later. Bye for now.